Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell. It is 6:14 a.m. on Tuesday, July 19th as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, Bitcoin's up about 1%. Oil's flat. Equities in the green, up about 7/10. On the macro front today, not a lot. We've got housing starts and permits. Over on the earnings front, we've got Johnson & Johnson, Halliburton, and Ally Financial before the bell. And after the bell, we've got Netflix. That'll obviously be closely watched, along with JB Hunt, one of the first, actually the first trucker to report. That will be interesting for that sector. And we've got interactive brokers reporting after the bell as well. That'll be the first of the broker dealers, and that will be a good one to watch for a read through on the other brokers, etc. So, kind of a disappointing day yesterday. We had a strong morning rally that faded quickly in the afternoon. I mean, quite dramatically. In fact, I don't know where we were at the high as far as percent, but then there was a pretty fast rollover. It was attributed to Apple coming out saying they're going to slow hiring in the back half of the year and into the front half of 2023. No cutbacks per se, but just them coming out saying, we're going to pump the brakes was the catalyst attributed to the market rolling over. But what I want to show you is on quite a number of indexes and stocks, price had found technical resistance, and we actually talked about that a little bit yesterday. So let's go through the charts. You can see here we had talked about 390 being a really, really important line of resistance, and we had come up right to it, and that's where the rejection happened, right at downtrend resistance and lateral resistance across 390. So a lot of times when you get what I'm saying was it was the potential for a reversal or a rejection was in the charts, regardless of what Apple might have said. Now that doesn't mean we couldn't have kept going if they didn't say that. All I'm saying is we had it didn't happen like in no man's land. It happened right at a key technical spot. So now today, after that rejection, I think your pivot point is this on the daily time frame is this 385. Get above it. We've got a little gap below that needs to fill. Not particularly large, but the key to the whole thing, in my mind, is do we get a breakout from the daily downtrend line? That would really provide some impetus to keep the emerging rally rolling. And if it can't, it's just gonna chop around down here, be pinned down, and you can see that the daily downtrend line is coming in at lower and lower levels, and unless and until we get that breakout, now the chances are, or I should say, there's a chance that there's just not enough power to break through. And in this case, what we'd have is, a consolidation. We would see this upward momentum on the PPO indicator flatten out and roll over. And you can see on RSI, we've still not broken above the 50% midpoint line, which basically is a requirement for getting RSI into the bullish regime. So there's definitely work to do, and it's anybody's ball game right now. But with price below the 50 and below the downtrend line, I'd have to think you'd conclude that the bears still have control of the tape, and what would change that is, of course, a breakout. Here we are on a 60-minute chart just to get some resolution. You can see I've created a resistance band here between 390 and 392. Rejections. Here we rejected right at 390. We had that big opening gap to fill, which is something we talk about, that whenever you have a gap up, there remains some vulnerability below as long as that gap is not filled, whether like here it was a gap and go, and here it was a gap and fail. So you've always got to be cognizant of that fact when you've got an opening gap below, that there's the potential that it rolls over and fills that, because we know gaps are going to get filled. It's just a matter of when. So just from a technical standpoint yesterday, if you had marked in your gap at the beginning of the day, and then you saw price roll over and entered that gap, from an active trader standpoint, that was your short. Or at the very least, hey, this thing has stalled, and I certainly don't want to hold my long for what could potentially be, a sizable gap fill. So today on the 60-minute chart, we're right here at 381. We're up a little bit this morning, but you want to see that 381 hold, or else you've got this basically a $3 gap to fill between 381 and 378. When we go over to the Qs, now we know here that we have broken above the downtrend line, which is positive. I've dropped in an uptrend line here off of the series of higher lows. But you can see here we've definitely got a problem at 295, where there was a rejection here. And yesterday I don't know if we exactly tagged the 50, but we got pretty darn close. And right at this intersection between 295 and the 50, let's see where the 50 comes in. Says 297, so we didn't get that high. We got to 296. So it made a reach up, didn't quite make it, but we know there's resistance there. So now price is pinched between the 8 and the 20 and the 50 above. And so we really need to see that breakout above the 50 to get this thing going to the upside. And here you just see the detail. We've got that little gap below. We've got a series of higher lows, and we've got the resistance across the top with a little gap to fill. And understand that the 50 is coming right in at these levels as well. So let's see how today goes. Don't forget, Netflix after the bell will have an effect on the Qs. Not dramatic, I wouldn't think, unless it does one of these, down $30 type of moves. But yeah, so we'd like to see this bounce and then make another run up towards the highs. On IWM, very much the same kind of idea, in that we've had this line of resistance up at 178, We got rejected here. We made a reach up here, got rejected. We didn't get quite as high this time, but was turned around. And like the Qs, we're above the 8 and the 20, still below the 50. What's got to happen at a certain point is a breakout above this intermediate downtrend line, and that would open up the chart for I would assume, a more powerful move up to fill this gap and at least come up to this 186, 187 area. And just remember, you got the declining 50, that each and every passing day, this is going to fall a little bit further. The line that really has to hold in my mind is this 168 area. It's been tested quite a number of times. This was kind of a momentum bear trap kind of a deal. We took a plunge, then came right back up above into the prior trading range, and then we've been kind of trapped in this area for a number of days. Here I've drawn in a triangle pattern. You can see that we've been rejected across the top, not perfectly, but right here at 176.50, and now we're back in the middle of the triangle. If this were to come down and break below 171, let's call it, then you're probably going to come back down here into 169, 168, even 167, where we had all these lows across here, and test that. Obviously, what we want to see is a breakout above this downtrend line, and then that should provide an impetus to run up towards this open gap where we've got a void in the volume over price profile, where we know that prices can run a little easier than down in here, where we've got just a lot of congestion, a lot of back and forth type trading. Meta, same idea, came up to, we had a nice gap off of the open, and it pushed hard for a couple of hours, actually had a reach up, almost got to 172 before things turned around. One thing I just noticed is that there is a small gap in this chart that I haven't marked. You may want to put that in yours. But I think it's got to hold 165. And if I were trading, or what I'll be looking for is, notice you've got two high volume over price bars here, and you had a bunch of resistance along this line at 165. If there's some initial weakness and you were to come back to tag 165 and that holds, that would be a nice objective buy in my book. Why? You've got large volume over price acting as support, and you've got a very well-defined line here where this was resistance all along this line, which now becomes support. So I think that's a worthwhile try if you get it. And then on the upside, we just got to get above 170 and then get into this gap and fill it. And then I think there would be some real running room to the upside because of this sharp decline back here where there was not a lot of transactions, more or less a liquidation sale coming from about 196 all the way down, $20, 196 down to 176. So you may be a person that says, I don't want to mess with it down here. I'm just going to set myself an alarm at, the top of this gap, or say even the bottom of the gap, and tell yourself, hey, until price can prove it, I don't want to mess with it. That's perfectly fine as well. And then you can play for this $3 gap fill, and then you can cross your fingers that there's a breakout above 176, and then you should be good to go on Meta. Apple, there was an unfilled gap up here, and it filled that gap, and I've taken it out, but then it just fell apart on the back half of the day on their news. Now today, you've got these large volume over price bars. I think you're at a nice spot. I think, I'm not sure if Apple's up in the pre-market or not, but that's a very objective level to try along. And if it opens weak and you come down to 145 at the bottom of the channel, that's another very objective chance for a long entry at the bottom of the channel. And we've talked about it, bottom, top, bottom, top, bottom. If you have any interest in trading Apple at all, that's the place where you've got the highest risk reward on the chart, because you're at the bottom of a well-defined uptrend channel. And then you set your stop just below. And then if you get stopped out and you look around the board and things are red and seemingly beginning to fall apart, you've got a nice risk reward to the downside. Number one, you lost the channel, but number two, you're moving into a void here, and you can go from 145 down to 142.50 in a heartbeat, and then you've got yourself a nice anchored short at 145, and then you can just see if 142.5 fails and the thing rolls down. But right now, you'd have to conclude that Apple's in a nice uptrend, still well within the channel. And if you get a chance to buy down near 145 at the bottom of the channel, you would have a very objective long. Tesla, big gap open, came up to the prior edge of the gap. That's why I leave them on here, just to show you that there is muscle memory. Remember, back here, we had rejections along this line at 745. Here we broke out. That turned out to be a bull trap, right? We broke out of the range, and then we came back in, and then came back down to the bottom of the range. Here we gapped up. There was muscle memory along 745, and then it came back and filled its opening gap. So, had a question in the trading room yesterday. Hey, should I short Tesla at 720? As it was diving, should I short it at 720? And the answer is, well, 720 is an important line. We had all this resistance here. We had all this resistance here. And so 720 is important support. You wouldn't short it until you confirmed that you got the break. Support is support until unless broken. Same way, resistance is resistance until it is broken. So you're either buying support, or you're selling resistance, or you're buying a breakout, or you're selling a breakdown. Now, in this particular instance, you've got a well-defined uptrend line here. And so there's a good chance that even if 720 broke, price would find support about $10 lower. So for me, not that great of a risk reward trade. I mean, you may be proven right, but $10 on a $700 stock, that's still hard to make money. I think a better chance would be, because you've got all this healthy support zone down here, you would either go short on a break of the trend line or just wait for a break of 790, and then you've got $30, $40, $50 if the thing starts to fall apart. So that's how I would handle Tesla. But right here, to me, it's an objective long because you're at support, and see if you can get a bounce. Microsoft came up, ran into this downtrend line, and then rolled over and filled the morning gap. I've got the pivot point down here at 253. You can see there was resistance here. We've got a large volume over price bar here. And so I think 253 is a pretty clear pivot on Microsoft. Amazon was another study in resistance at a well-defined line. We were talking about 115 being a pivot. We opened a little bit below, gave a nice entry at 115, hesitated for a little bit, then made a push to 117, where we've had rejections here, and it rejected a third time. So I continue to think the levels remain important. You've got a level at 112.50, you've got a level at 115, and you've got a level at 117. And if you're sharp, you did get $2 out of it if you were smart enough or good enough to say, hey, it looks like it's stalled, get out. Or at the very least, when it rolled over and you went into the morning gap, that you got out for a scratch trade. Google had a bad day at the office, lost this support here, and now we're down at key support. We've got lateral support at 109, and we've also got the series of higher lows trend line right here. So it's going to be incumbent upon Google to hold this line, and like we were just talking about, very objective long at this level. You've got two layers of support. You've got the trend line, and you've got lateral support. I mean, and if it breaks here, then you're most likely going to go to 106 for a visit. So that would be a nice short opportunity if Google can't hold this 109 and this trend line. So I would be aware of that. Netflix, gap up, came up to the high volume over price bar here at 198, spent, let's see, 1, 2, 3, 4 hours not being able to get through. And that's a sign unto itself that it was having trouble there. And then it rolled over and filled the morning gap. So 190 is your pivot for today, where there was support here, and you've got a larger volume over price profile here. So I would think it's got to hold 190. I would pay attention to this in case there's any kind of pre-earnings move. I mean, this has been really strong the last couple of days. I don't know if somebody knows something or what's going on, but price action has been strong, and you could just view this as a an impulsive move higher, followed by a pullback, and now we'll just have to see if 190 holds. Semiconductors also a disappointing day, but when you look at it, this 218 area was a problem back here, was a problem back here, and so it found that resistance, was rejected, filled the morning gap. So now it's got to hold 212 in my mind to keep this thing going in the right direction. We've got a layer of support at 208 and then at 206 on the downside. FinTech pretty much filled this upper gap, then rolled over, had a big gap to fill below, came down halfway to this value area. I think your pivot is at 1650. Really, to get this thing going, we got to get a breakout above 1720. Come up, fill this gap for sure, and then break out. Otherwise, it could, sink down here, fill this gap, and maybe get some support here at 1620, 1610. Genomics got up to a back test of the uptrend, was rejected there, came back to this 35.25 area. You can see support, 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 support. So now, if that fails, I think you're going to come down here to 34 pretty quickly at this high volume over price bar. And then if that doesn't hold, you've got another $1.50 to $2 down here to this level in the 32.50, 32.75 range. A lot of these charts look the same. ARK-K came up, made a little run at this gap, and then just rolled back over again. I made this line here at 45.50, a little bolder, because we had rejections along this line. It's where the big value area ends. So this 44 area becomes important. If it loses it and loses this uptrend line, then down to 42.75 and potentially lower. So this is going to be a key spot as it approaches the uptrend line off of the prior lows, series of higher lows. So this thing is still heading in the right direction. It's just been, choppy as it tries to take out overhead resistance. And then ARK-W, same thing. Gap up, came right to this line where resistance, and we had a high volume over price bar. Spent several hours and then rolled back down to almost fill the opening gap. I think if price can recover this 52.50, you might have a nice long going forward. But it's got to hold the open, because that's the bottom of this large volume over price bar. You lose that at 52, you're going to come back to 50.5 and probably even 49.5 to test this line of support down here. Now, we're in Micron. What I've got here is a 60-minute chart. We, over the last couple days, Friday and then yesterday, we had made it up to 62. And then it rolled over to 60. I think it's really got to hold this line here for our calls to work. Otherwise, you drop below. There should be good support here with these volume over price bars. But at some point, you're going to have to say, I got stopped out where that, certain level is. You'll have to decide. But just remember that, say you come down here and you stop yourself out, realarm 60. because you get that breakout again, then it becomes a long again, right? Because you would have taken out all this resistance and you've moved into this thin zone. I still like Micron. We'll have to see if price cooperates on it. Wanted to show you a couple retailers I found interesting. When the world was falling apart yesterday, Target held its ground pretty well. You notice that after the big drop, there was some consolidation between 151 and call it 167. It broke, but now it has formed another base down here and is trying to move above that 151 level. Remember what we say, if you leave a trading range and then re-enter it, the target becomes the far side of the range. So while the market has been a little wobbly, Target is making progress. So if you're interested in Target, I would alarm this area here, 151, 152, wherever you feel comfortable taking it. And then you'd have a very objective long to see if price can come up to meet the 50, which comes in at 163, and even potentially to the top of the range up at 166. So I think this is kind of an interesting setup in retailers. And along the same lines, Walmart had a sharp liquidation, big trading range. We did not catch it here at the bottom. I think we talked about selling puts below, whether you did that or not. I mean, those obviously paid. But now we're up at the top of the range, and we've got key resistance at 134. You could trade this in a number of ways. You could say, okay, I can take it long here against 128 and see if we don't make 134. Or you could say, I don't really want to mess with it down here, but I will set my alarm at 134, because if price can make it up there and break out, you'd have the declining 200 to contend with, but you'd also have a big gap above that you'd certainly want to participate in if and when it got up there. So I think some of these retailers are shaping up. And let's finish up with ExxonMobil. The commodity energy complex was really strong yesterday. We may have seen at least a short-term bottom in the energy complex. I just picked XOM out because I had the chart handy and it looked kind of interesting. There's a lot of other ones out there that'll have a lot more beta, move a lot faster than XOM, but we did get long, or at least I did, XLE, August 72 calls. And if you go look at that chart, we're at the bottom of the channel, very much like the Apple chart, very well-defined uptrend at the bottom of the channel. It doesn't get much more objective than that. But XOM is 25% of that. You can see a very large volume profile here, the top of which comes in at 88, and you've got the 50 EMA coming in at 88.50. If Exxon can break above, let's just say the 50 at 88.50, get above all this volume over price resistance, I think it's got some room to run to the upside as this volume over price profile pulls way back and you will have not only broken out on price, you will have recaptured the 50 EMA, and that's always a good thing. And you can see the PPO starting to curl up and potentially ready for a bull cross. And you've got RSI trying to make a move back above 50. So oil was down just, I think, 25 cents this morning. So let's keep an eye on energy. Flip through your charts if you want to get some exposure, especially if you want to get higher beta exposure. There are a number of charts that look similar to this, where price has made a bottom and is trying to recover EMAs. So if you want to get in on some of those names, you're welcome to do so. So let's wrap it up there. Let's see how Netflix goes this morning, along with JB Hunt in trucking. We got Halliburton before the bell in oil services. IBKR after the bell. Brokers. A couple interesting names there today. So we'll see if price can kind of recover last night's sell-off, hold the key levels, and grind higher. I will include this morning on the blog a couple of charts just showing positioning and sentiment are very, sentiment remains very, very bearish, which is contrarian bullish, and positioning is also very bearish, which is contrarian bullish. I'd like to see if this rally can muster some legs and really get us going. We've yet to see that yet. Maybe it won't happen, but I'm still hopeful for a rally up to some higher levels where we would probably want to peel off some of these wins and potentially set up for a leg down after a nice rally. So we'll have to see how it plays out. If you're new to the channel, thank you so much for spending time with me. Please hit the alarm button and the subscribe button, and that way you'll be notified of my content. If you want to take the extra step, jump over in the show notes. There's a link to the blog site where you can drop in your email address and then get my content morning, noon, or night right to your email box. Be great to have you on the team. And you'll also get a invite to our trading room. We'd love to have you there. A good bunch of guys and girls all aligned with each other, working hard to become better, more profitable, and consistent traders. So we'd love to see you there. Have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.